All right, let's jump into it. Where we at? 12:49. So a little bit earlier today, in the middle of the day, on Sunday, 10th of August. So look, there's not really so much. It was very quiet sort of data week and that sort of through the week. So it's not a great deal to sort of report on. Sort of looking back, but I think it almost sort of seems a bit, of the time of year at the moment. Like summer months and that we've got. It was busy data wise 2 weeks ago, quiet week last week, and then obviously coming up this week, we've got a couple of sort of larger bits of data in that, which the market can hopefully get a little bit more of an idea and a bit more direction off. So, looking forward, we got sort of a bank holiday in Japan. I mean, for what it's worth, what is it, Japanese? Yeah, Mountain Day. Okay, of course, that's a good reason to have a sort of day off. Excuse me. I didn't see this. So Bowman was talking overnight. Very odd sort of time for them to be talking. But Bowman, of course, is one of the dissenters, one of the ones that are sort of pushing for the Fed to sort of cut a little bit earlier. And look, I've said this a couple of times. Typically, in the past, I've not really sort of paid too much attention to these sort of Fed speakers. But they have been moving the market a lot recently, and there's a lot of talk because obviously Powell's finishing up. I think it's May next year. There's a lot of talk around who's going to sort of replace him. I think somebody dropped out, or sort of somebody's temporarily sort of been put in one of the lower seats or something at the moment. Don't quote me on that. Um, just the other day as well. So, there's a fair bit sort of going on in that direction then. And as I said, this Bowman lady, when she was sort of speaking, Bowman. Anyway, speaking the other, like going back a couple of weeks, US dollar just got crunched on that. So, I mean, US dollar's on a sort of knife edge at any sort of moment. Like it wants to get up, but it very quickly people sort of lose faith in it and smash it back down, as we've sort of seen. Like this week was a shocking week excuse me, for the US dollar after NFP and then obviously ISM on the Tuesday there as well. So they got absolutely hammered. So it'll be interesting to sort of see how this has affected the market or how it will affect the market, what the sort of comments were and that. I'll have a look into this just before we sort of open up for the week. But as I said, like, very much in the case of look, bring on the cuts, got to cut sooner, these kind of things. So US dollar negative pretty much anytime she opens her mouth is kind of the point I'm getting to with that. And obviously the big one, which I'll get to in a moment, is CPI, which is be the big thing that you're looking for with the US this week. Moving forward, I've got like inflation expectations, nothing really major. No, so Monday, typical sort of thing, a little bit quiet. I think if you're ever going to take a day off, I think Mondays kind of seem to be it because there's never really any sort of market moving data on the Mondays. Tuesday, of course, coming forward, we got RBA, and this time, again, markets expecting the cut. I don't really think Bullock's got, excuse me, I don't think Bullock's got any reason not to cut this time. Like all the sort of boxes have been ticked. I think it's been widely, excuse me, one sec, slowly going here, stop sort of coughing into a thing. Um, what was I saying? So yeah, Bullock, the boxes have been ticked. It kind of sort of feels that I think it's widely sort of thought that maybe last time was probably a misstep from the RBA to sort of actually hold when they did. It's kept Aussie sort of a little bit elevated. Most likely they are going to cut. But I think the thing is with this, because it was the market was already kind of priced for it. We saw what happened, obviously, when they held last week, or last week, sort of last time, about a month or so ago, and price appreciated very quickly. I think 50, 60 points off the bat, straight off that. But it held it up for a long time there. So I think pretty much the market's expecting this to happen. Whether it happened last time or this time, the market has been kind of pricing for it. We did see BOE cut this week as well, just passed. And it has been a bit of a theme recently, I've noticed, with a lot of these sort of central banks that, they cut and price appreciates and it actually goes up, which, is kind of counterintuitive to what it should be doing. But again, I think it's more of this sort of like buy the room, sell the news kind of thing. So just because Aussie's cutting or the RBA cut here, if they do, we actually have to see it happen. But if we do see them cut, doesn't necessarily mean Aussie bang is going to be going to the floor. Which go back a year, 2 years, 3 years, whatever. That's what you would expect to happen. More recently, it's been very much the case of okay, they sort of cut and then they fly up. Like I'll show as an example here. This was the pound. Obviously, sort of close week on the thing, but this is where they cut. You know what I mean? Sort of, is it this one here? 10:30, 10 o'clock. It was about 9 o'clock or so. Anyway, the point is that sort of like, when they cut through the week, right, no, sorry, I'm making things up here. That's not where they cut. 7 o'clock. All right, bear with me 1 second. All right, after a little bit of playing around, 9 o'clock on the Thursday. So, coming into the Thursday session, again, you would expect this price to be sort of down the bottom over here and continuing down. But obviously, given other factors, everything else into it, we have actually seen it appreciate into the end of the week from that point there. Anyway, getting back to what we're talking about here with the RBA, and get back onto the right week here. uh, Yeah, so we are sort of expecting a cut. So we'll see how it comes out with this and that, but it won't be any great shock. I think again, more the risk with this sort of thing is if they do hold again and we see price push up to the top side there. But we'll see how this one goes, and obviously the RBA, the presser is a good indicator of sort of what potentially we could have to come through to the end of the year. All right, so moving along there, that's obviously Tuesday. Tuesday night is the big one that the rest of the market pretty much is going to be looking for, which is CPI. We're looking for a little bit of a tick up here year on year and a little bit of a move down. A little bit of a move down. It's always a bit odd with this sort of stuff here that you're sort of seeing the CPI month on month is going to be coming down a tick, but then you've got your core, which I think sort of is basically stripping out sort of like your more volatile things. I think like fuel and these kind of things as well. So a bit of a mix of it all here, but this is the big one that the market's looking for because Powell has been sort of saying that look, given all the tariff sort of stuff, inflation will be sort of showing up. Hence why he wants to take a more cautious approach and hold rates higher for longer. And he said sort of like, the employment was the big one that could sway his decision. And we saw with the shocking numbers more or less actually the revision of that sort of NFP number, that that sort of means, okay, well, the jobs, that's looking a little bit shoddy. The only thing that's really sort of holding him or holding the sort of like holding them off from sort of cutting at the moment, is the fear that maybe CPI may sort of tick up a little bit higher. So the point I'm saying with this is if it comes in a little bit lower, then you've got your dual mandate, which is inflation and employment, and if jobs are requiring, but are more in the camp of okay, yeah, you should probably be cutting to help sort of stimulate things, to spur on the economy, to create more jobs. And if that's in that camp of cutting, and then CPI comes down, well, that means that inflation isn't the issue or isn't showing up at this point, and well, you could probably cut then. And that's the kind of feeling with it all. So I think the market's really going to be watching a lot for sort of what happens with CPI. If it comes in hotter, then we've got a sort of bit of a balancing act because he did say about the jobs, but then you've got you because the thing is it's what they call the dual mandate, and that's the two things that they're looking at: the jobs and the sort of inflation. So if both are ticking in the area of okay, maybe the Fed should cut, unfortunately, US dollar is going to take another bath. But if we do see this as a tick up, it doesn't mean necessarily US dollar will rocket, but it should at least stave off sort of getting slapped down even lower, back down to the recent lows. Moving forward, I've got this. I don't know this Barkin person, but as I said, with these sort of people, I think the main two people that are really sort of pushing for the whole idea of the cuts was that Waller and the Bowman. So anybody else sort of speaking at the moment um, probably has a bit more of a hawkish sort of stance. But of course, this will be just after the CPI, so it'll be interesting if they've sort of like really kind of they'll have this sort of pre-prepared their speech most likely. Obviously, they'll have their talking points, but depending on how this comes out, they may actually give some sort of commentary onto this as well. So this could also be a bit of a mover depending on what we see. So for instance, if we see a sort of a hotter print over here and then we've got a bit more of a hawkish Fed speaker, well, that could be a double whammy for holding the US dollar a little bit higher and a little bit of appreciation there. Moving forward, Wednesday, nothing really of note. We got wage price index, okay, sort of coming down a little bit. This is quarter on quarter. So pay for, government pay for labour. Yeah. Look, again, I just don't think this is going to really be moving the market a great deal. Um, it's that time of the month, and we got the employment change with Aussie. Bang! You know what? Throw it at 20,000. I know I cover this every week, but look at these forecasts. They're just smack bang, and they're just wrong every time. 30 minus 52. They got pretty close here actually. You know what I mean? Minus 57, they said 39. That's about the closest I've seen them get. 20, 89. 20, minus 2. 20, 2. Like, just throw it at 20 and just expect that's what we're going to sort of see with it all. So, unemployment rate ticked up last time. They're expecting this to come down a little bit. Sort of like if we see this sort of if we see the employment numbers sort of remain low, then obviously that's not a great sort of look for the Aussie and that, and potentially we could see them sort of weaken, see the Aussie weaken a little bit off that. Uh, of course, as well, we have the unemployment rate, which actually sort of ticked up, I think, a little bit higher last month. I'm pretty sure they expected 4.1. So they expected it's been very solid. If you look at this, it's barely moved 4.1% all the way through for a while. And so we had a bit of a jump up last time. So again, if this is ticking up, if we're sort of seeing higher unemployment, lower jobs, well, that's not necessarily a great sign of the economy. And again, you put it, what camp are you going to put it in? And it's going to be more in the idea that, obviously we're going to have the rate decision just before that, but it bolsters the idea that there could be potentially more cuts to come. So even though we just have the rate decision 2 days prior, I mean, it's forward sort of looking for the end of the year. And this is why the press conference after the rate decision is actually so good, because they only just started doing this year with the RBA. So, it gives us a bit of an idea about what are the numbers and what are the figures that they're actually looking for. And so if they sort of say something down these lines here that sort of, what, we're going to wait and see approach, maybe we cut today and we'll wait and see, how the employment figures come out. And if the employment figures are bad, i.e. uh, low jobs created, unemployment moving up, excuse me, then that could be something that would sort of bolster the idea that there could be more cuts to come coming into the end of the year, and obviously vice versa with this as well. If we get a strong number, I mean, it's all over the place. I mean, look, you have 89,000 and then minus 2, and then 2. Like, it's very, very shocking numbers and that with it all. But again, the press conference will be a good indicator of how the market's going to react to these sort of things here as well. Um, the RBA bulletin seemed to be very slow moving, very cautious with this sort of stuff, I have to sort of say. And so a lot of what they do is like, okay, we've just done it today. Let's wait and see. There's no like, bang, we're going to really hammer it and so we're going to get this thing done, or we're going to cut and we're going to make sure we get it right. It's always like, oh, I don't want to upset people and I don't want to sort of commit to anything. So, let's see what they say with the press conference, basically. Moving forward, we've got GDP again, look, pound and that. Not really something I pay attention to. A little bit of a tick up, so a little bit more positive for them there. We've got PPI will be the bigger one of this kind of session here after that. So Thursday night PPI, which of course is the producer price index. So you got CPI, which is the consumer, so down the end, and then you got PPI, and this is looking to sort of tick up here a little bit as well. Same time you got the unemployment claims, but on the PPI, obviously, look, if the producers are paying more for actually the products and the raw material kind of thing that go into whatever it is that they're sort of selling, making up, and then manufacturing, and then selling on, or whatever, down the line, down the trough to the consumer. If they're paying more for it, if they're seeing inflation here, there's a good chance that that's going to trickle down to CPI as well. So obviously this sort of higher number means that the inflation is potentially floating around there, and it could just be sort of waiting to sort of trickle and actually get down to the consumer. But obviously, as I said, we got CPI earlier in the week. That'll give a bigger picture, bigger idea with it all. Unemployment claims, again, fairly stable with these, actually. Like, it ticked up, if we go back, it's actually a little while ago now, but we got up around the 40s for a little bit here. And there was this fear that sort of like it was coming at the same time that, US dollar was obviously getting bashed, and we had the tariffs going, and, so unemployment going up. We got tariffs happening, and it was just like a double, triple whammy for US dollar. And that's just why it's been trading still so heavy. It's fighting on so many fronts. But, little bit by little bit, sort of like if they can sort of keep this fairly stable, and if we do see the inflation sort of ticking up in that, it kind of means, okay, well, as I said, back to that whole idea with the dual mandate. If an unemployment isn't ticking up, then it doesn't warrant a cut to stimulate it. And if inflation is moving up at the same time, then maybe that's not the time for them to be sort of cutting rates, which would exacerbate the problem with the inflation. Move forward through the Friday, nothing really of note in terms of data. A little bit of China data coming out over here. Um, Look, the one's really just becoming just an absolute snoozer. I mean, it always is. It's a very slow moving pair because it's really sort of controlled a lot by the PBOC. So it's not really like sort of it doesn't move and trade the same as a lot of these other sort of bigger um, other sort of major currency pairs. So yeah, look, we'll have a look at sort of what happens here. Obviously, anything that's sort of better for China, you'll see some flow on from Aussies for some proxy there. The yuan has been very stubbornly strong um, over the last couple of months. I've covered it a few times, broke through that sort of weekly range, and it's just been consolidating out the bottom of it. It's tried to break back through a couple of times, but at the moment it's being held fairly solid. Um, Move along. Interesting press conference over there as well. And then sort of Friday, we've got a couple of European holidays. Assumption is it the same here? Yeah, okay, so a little bit of sort of a holiday there. And then core retail sales into the end of the week, and also consumer sentiment. So there's excuse me, there is a fair bit of data coming out this week. So as I said, like last week, enjoy the quiet time because before you know it, the market's getting back to these things, and it's like, oh, this is coming up, let's price for it. This is coming up, let's price for it. Retail sales looking to tick down a little bit here, and also maybe down a little bit there as well. So sort of higher numbers with the retail sales. Obviously, look, it looks a bit better for the economy kind of thing. If things are sort of slowing down a little bit, it's in the idea that, hey, look, again, you just basically got to put each of these bits of data. Not every bit of data is obviously weighted the same, but they both go into one camp or the other. Is it more likely to add to the argument for the Fed to cut, or is it more to add to the argument for the Fed or whatever central bank you're talking about to sort of either hold at this stage, because nobody's talking about sort of hiking rates. Even though I think Powell actually a couple of weeks ago said that, like, people are happy, people are lucky that he's not raising rates. So I didn't even think, well, it's not really, I don't think, part of the real discussion. But I think mainly that was probably more of a pushback against all that sort of like, Trump really sort of hammering him, sort of saying he's too slow and he's stupid and he's costing people money and he should cut and should resign and all this kind of stuff. Like, I've said it a couple of times, look, I'm a Trump fan, but to a certain degree, sometimes stay in your lane with these kind of things. And it has made it very, very turbulent to sort of trade this year. So yeah, we've got retail sales, we've got manufacturing numbers, Empire State Manufacturing looking to sort of tick down. Obviously, again, not a great thing for the US dollar here. And then we've got consumer sentiment looking to sort of tick up a little bit. Okay, that's fine. Inflation expectations, haven't got any sort of forecast for this at the moment. And as you can see, it's kind of tracking down a little bit here. So they're sort of thinking that inflation is going to be sort of coming down with this kind of stuff. So yeah, quite a fair bit of data in that, and a lot of sort of balancing acts. Really, US just needs to have a couple of good data points in succession, because it keeps stepping itself up and then sort of getting slapped on the nose, really. So with that, we'll have a look at the charts, and we can see what we're sort of maybe looking at come this week. So yeah, of course, excuse me, DXY to sort of start off here. We had that massive sell down on NFP, a little bit of sort of attempt to hold this sort of higher time frame sort of support area here, but obviously, ISM on top of this as well, slapped it down and moved right through. Wasn't a real big fan of this kind of thing for a bear flag, but I mean, it is kind of there, I suppose. Whoops, kind of there at the moment. So yeah, what I'll do is I'll just put this down here just in case, see what happens with it. But I don't think it's going to get down to this level, to be honest. At this point, anyway, we'll see. As I said, there's a lot of bits of data coming out this week, and I think if CPI comes down, that's the biggest one that we're probably looking for. If CPI comes in cooler, then we could definitely be seeing these 97 levels with the US dollar. For the short term, though, look, it was obviously sort of having this little sort of falling resistance here, lined up pretty well to sort of make a bit of a sort of channel here. And this is the thing that you can take with these. Like we've got 3 touches along this line here. Had this one come down here, and then obviously on with the show, moving down. But early indicator of these things is when it pulls away from continuation of the structure. And as we can see, it's put in a little bit of a double bottom through here. And it's actually did slightly get to the top side and pull back a little bit sort of onto the top side of this sort of falling resistance through here. Interesting where it is actually finding resistance now, because this is obviously that previous gap from way back over here. Was that sort of like end of June? So look, it's a slightly significant point. It was a 61% retracement as well. Look, it's got work to do, but again, look, the little alert above 98.5, I think that could sort of open the door up to sort of maybe testing this level over here. So if this were to be the sort of channel, you'd use the size of the channel off the break point. I guess you could probably almost use it off the back test point there as well, but I think technically off the break point, and this is just a back test. Higher high here, and obviously take out these wicks, which would be your swing high, opens the door up, and 98.83 would be the sort of the first target to kind of be looking for. Again, it just needs a couple of bits of data in succession without sort of having some sort of shocking bit of thing, because as you can see, it was tracking fairly well off the lows here. You had this little bit while I was away, but yeah, we're moving up, and then NFP, bang, moves along a little bit, consolidates, ISM, bang, and you know what, bang, we're almost back. This is the 78% retracement back down here at 97.80 and give and change. So look, if market, given the right conditions, market's happy to buy it. Obviously, I don't think this is just a move up just to sort of slam it down, but the thing is, the market's very happy to sell US dollar at a moment's notice. Bit of bad data, bang, sell it down. And the whole tariff thing is still sort of floating about as well. Yeah, we had India sort of, I think, like 25% tariffs this week. It was a little bit of a sort of cheeky one by them, though, because they sort of, I think, that's sort of to do with the Russia situation. And of course, I didn't even touch on this before, because this is another thing that's obviously not a data point, but it's a headline that Trump is meeting with Putin this week. I'm pretty sure it's this week. And I think they picked Alaska as the place to sort of meet, which obviously, once upon a time did belong to Russia, and I think they sold it for 7 million or some ridiculous amount. They sold it across to America. But regardless of that, that's another sort of part of the market that could be, sort of impacting things as well. So should that go well, that's probably a US dollar positive kind of thing. But back to what I was saying, yeah, India, they had been buying Russian oil on the cheap and then selling it into the market. And of course, the US doesn't like that, because they're trying to sanction, and they use the sanctions as like, their sort of their weapon of choice against, at least particularly against Russia, with the whole sort of war situation going on with Ukraine and all this sort of stuff. There's so much stuff, so many moving cogs at the moment, and this is why sort of like, you can deal with that, because this is the game that we play. That's fine. But then when you chuck in some random tweets from Trump on top of all that, that's when it makes it very difficult, because they can come at any time. There's no set time for them. But yeah, anyway, so as I said, 25% base point, 25% tariff on stuff coming out of India, because they were buying the Russian oil, so they weren't happy with that. But as I said, if that goes well, we could see gold obviously had a little bit of a slap as soon as that was mentioned. I'll get to gold chart in a moment, but as soon as that was mentioned, gold got slapped 20, $30. It held and appreciated, because of course it's not the only thing that the market's looking at. But it's obviously something that will impact the price, because as soon as that headline came out, the market dumped gold $30. So again, if that's just on speculation, oh, they may have a talk, or they setting a time. They hadn't even set the time or the place at that point. So, but it gives you an insight as to how will the market react should these things go ahead. So it's something else to sort of keep an eye out for this week. Um, Back to what we're talking about. So I think sort of like particularly if that sort of talk with Putin goes well, we could see the US dollar appreciate off that a little bit as well. So a lot of moving parts for it all. Look, short term, I want to see it above 98.50. If it goes below sort of 97.90, look, you've got a couple of levels of support down here. We've got a horizontal, plus also we got the 78%. I think any sort of move down here will be sort of bought up, at least prior to CPI. So CPI is on Tuesday night, so it's pretty early in the week. So maybe just a little bit of a consolidation through the Monday and sort of maybe bounce between sort of 98.50 and 97, call it 98, these kind of areas through here. But certainly, I think if we can get above 98.50, I think there's a good chance for this to at least undo this move up over to here. Still got a lot of work to do to get through these levels over here. And I think that's really where you're going to sort of see US dollar do a little bit better. If we can get back above 99.2, that'll be the area in which I think it actually does a little bit better. But it needs to work its way up here. At the moment, it's still a fair way off. So you could see it potentially sort of come back up here. You'll find sellers. If you do get up over here, you'll find sellers. That's fine. I mean, it's expected. It's just a matter of will the buyers then chase it up? And that's what you want to see. You want to see them push up and then the buyers move up the bid and tackle this thing and get back to what they need to be doing, which is buying it up. 1 second. All right, so moving on gold. So gold, as I said, look, it held quite well, sort of closed quite strongly actually, but really just consolidating up into the end of this week here. So let's find what chart we were working on with this one. So I was tracking this little sort of rising wedge through the end of the week there, and I was like, okay, this isn't too bad, and we're breaking down, and then boof, straight back up there again. And again, I think this was just headline based. I think, let me actually just find that. All right, so a couple of bits that I'm actually just looking through here. So apparently the White House, let me sort of basically, it's just here we go. This little snippy tool. The White House to clarify misinformation on gold tariffs, and this is what sort of saw this last minute sort of sell down here. Let's get back onto a lower time frame. Market bought it straight up, and this is the moment here into the end of the week, and then bang, straight back up over here, and actually sort of closed obviously quite strong on the whole week. But that was one thing that I didn't even touch on before, that we had this supposed sort of tariffs coming out on gold throughout the week, and this is what actually sort of caused. I can't even remember which one it was now. Maybe one of these ones. I think this move that popped up over 3,400 into, I think it was a Thursday, Friday morning. Yeah, so Thursday night, Friday morning, we opened up and that just over sort of 3,400. Market sold straight into it. So as you can see, it's building itself a pretty nice little straight line resistance here at 3,400, give or take a couple of cents. So this is where we'll just make the next zone. I think if this thing opens up and opens up above here, look, we've got some resistance up here, but certainly a move up to maybe sort of 34.40s could be on the cards should it get the right thing and move up the top over here. As I said, there's a couple of factors happening with these sort of things that just sort of unpack a little bit more about whatever this sort of misinformation clarification that they're doing with the gold tariffs. That could be something that weighs on it. As I said, the Putin situation, I think that was this lot here, where sort of like it, as you can see, it's just one big candle straight down, 96, and then what did it do? It came down to 72. So that got just slapped there. Yes, it bought straight back up, but it gives you a little insight, in my opinion, as to sort of how the market will react should the talks go well. And I think if the talks go well, you could see gold roll over and sort of pull back down to these lower levels over here. Because the thing is, gold is obviously the hedge. Gold is sort of like, okay, uncertainty. We saw this mainly more recently with the tariffs and everything, and got it was absolutely pumping. But with the war and all this kind of stuff, the market just used to just sell. And I'm talking at this point, talking about the Iran, sorry, the Iran situation war. The market just sold into that. But if we see a de-escalation of the Ukraine situation, well, market may go, okay, well, we don't need to be so heavily hedged we don't need to be so heavily covered by holding such a larger gold position. So that could sort of see prices move back down here a little bit as well. We also got another headline out regarding China this week, apparently back on the buy. Haven't seen a massive lot of Asia session buying though. Regardless of actually a lot of the week, a lot of these sell downs were coming in Asia, and then got bought up in the US session. So obviously a little bit of a grind up over here, but I think sort of underneath sort of 30.70, we could see a little bit more of a move to the downside. So let's just put a little move over here. That's where I'll be looking to sort of move down from underneath sort of 30.70. I think if you get a close up above here, then there's a high possibility you're probably moving up around sort of 34.30 would probably be the sort of place that you'd be expecting the market to move to. Do I have an arrow on that one? No. So they're the kind of levels that I'm looking for direction here. Look, I do honestly, I'm more in the case of this actually probably moving to the downside, all things considered. I think CPI may come in a little bit hotter. I think US dollar may run off that. I think that'll sort of, you know, see probably a little bit of benefit in the US dollar. So hence, so like not so much for the gold, and also that this whole sort of thing with Putin as well. Should that go well, I think that could also add to sort of more downside. So look, it is very stubbornly strong, and it is moving back up over here. And kind of, I mean, if you look at this thing on a daily or a weekly, you know, so the daily's not as convincing, to be honest. But the weekly, that looks bullish. Give some, whatever, I'm really clearing these things up, but that looks bullish and looks like it may sort of want to come up. And if you look at that, that's actually a body fill at the 30 as well. So where's that little line gone? So that's a body fill line there as well, which comes in line with this. So as I said, I think 34.30 is probably your top side target if it does decide to open up and go a little bit stronger. A move above sort of that, so 34.40. Obviously, it hasn't managed to close a daily above that zone there, so that could be very bullish should it get a close up over here. Wouldn't necessarily want to be too heavy short if that were to be the case. But as I said, I think there's probably more chance of this thing sort of rolling over and sort of coming back down here. And I think if it does do that, like we've got this pretty much a nice, decent little range here. But as you can see, each time it's come up and it's tipped the top, hit the top, hit the top. And same as I was saying before, like what you look for with these things is, okay, that's a structure because we've got a range, a change, a break of that sort of structure, i.e. sort of like if it rolls over before completing it, we'll put in obviously a lower high, which could add to that down pressure to come down through here. If it comes up here and taps into 34 and then sells off, well, it's kind of like on with the show. Like, top, bottom, top, bottom, top, bottom, that kind of thing. But should this thing fail before getting to the top over here, I think that'll be quite significant. And as I said, underneath sort of 33.70, I think may sort of open it up for a little bit of a move back down towards sort of 3,300 at least. And that's really your big test, around that sort of 32.80 level. So have a look on 4 hour. Yeah, so we'll see how these things sort of open up over the weekend. All right, and moving on. All right, and so we got a bit more here. So we got Aussie. So Aussie's an interesting sort of one. Well, I mean, it's always a bit of an interesting one. We've got a couple of things going on here, though. We've got a little bit of a little bit of this sort of megaphone pattern that's extending out here. It's funny because obviously different feeds will give you different highs, lows with it all. So I've got a different feed, which is this, got a nice connection on these three here. But point being with this at the moment that obviously we've got this is now 4 touches down onto this lower trend line, 2/3 in this period here. But of course, if we carry this one all the way back over here, so if we actually sort of drag it and have a look look a little bit deeper back in time, you can see this obviously has been playing a little bit of a part, pretty much back from Feb. Is that Feb? Is it? Wow, so a long time now it's been sort of capping the top side of this move. So look, it has been sort of recovering. We do sort of just drop just shy of the 61% retracement of this last big sort of sell down move through here. And obviously, look, it goes in line, even though sort of DXY is obviously not technically sort of like, I mean, it's made up of the other majors. Aussie isn't part of that. You can still take it pretty much running in line. Obviously, give and take a couple of moves here and there, and obviously the percentage in which it has moved compared to the others. But we've seen that big sort of rally effort on US dollar, still pushing Aussie down. Um, of course, it sprung back to life. It was right on the line here. So really at its last point. And this is why I sort of feel that I wouldn't fully count the US dollar out quite yet. I mean, certainly if we do see that sell back down to the low, so as I said, like with CPI, if these things come in, so come in a little bit cooler, then what I mean, it could sort of lead more to the idea that US dollar sells off a little bit more, and that'll probably be something that can push Aussie up a little bit higher. Of course, we've got the rate decision coming out as well, and I feel to a certain degree that may be kind of why it's been capped here a little bit, sort of through most of Friday. I think pretty much, as you can see, it's 3 o'clock on 3 o'clock on Thursday, that 4 hour candle there. So tipped up to sort of like 65.40, which was actually the triangle measured move, as we can see, of its little recovery effort here. So there's a whole bunch of things going on with this, and that's what I was saying. We had a little, consolidation sideways, little triangle, which obviously at the time I said, look, it favors the idea of the direction coming into it. So obviously we moved into this consolidation in a positive manner off the back of the NFP and broke higher, completed that. Now it's sort of shored itself up a little bit of a channel. That's fine. It's a little bit short of the 61%. So obviously RBA this week is going to be a bit of a mover. However, I do believe that may just, if anything, just cap it at the moment, because we sort of thought, hey, Aussie was going to be, or the RBA were going to be cutting last time. Didn't really affect Aussie a great deal. I mean, look, it's slow. I mean, had they sort of had a bit more of a hawkish outlook, then maybe Aussie could have been doing a lot better, as I said, compared to the peers, and that you had Euro pumping at sort of yearly highs, and well, I mean, technically Aussie's at its yearly highs, but it overcame that large drop down that we saw from October. And obviously Aussie very well shy of that kind of recovery move, as it is at the moment. So I think that the RBA sort of cutting is only really just capping things at the moment. I think the market's kind of already priced it in, the fact that it hasn't really sort of committed to the top side move here. And I'm pretty much just sort of waiting to see what the market does with US dollar on a more sort of broad sense. And if they start to buy up the US dollar, I think an early indicator of this move come back down over here will be the break of this rising support through here as well. So that's pretty much what I'm sort of looking for. If we can break down through here, obviously you've got a couple of little sort of horizontals to get through under here. So I think back down underneath this sort of like, 64, 80, 65, these kind of areas here, you could almost sort of pop this up a little bit higher to get a technical resistance. Actually, I'm not going to do that. I like that sort of those resistance. Look, it's all your own preference with how you chart these things, but where the body fills, that's where I like to have my sort of support zone. So obviously went for a bit of a back test here, bought straight back up over there. So look, if we do come down, I think underneath 64.80, that kind of area is what's going to sort of be, okay, we've clearly broken this recovery channel. We've taken out kind of what would be the swing highs. Well, actually, the support here would be an area through here. But in saying that, I do think the 64.80 will be more important than just getting underneath 65, the round number. So underneath 64.80, I think we can say, hold on, it's only going to be coming down to the bottom here. And again, if you put this onto the higher time frame, we're still waiting for this second effort down here. Look, V-shapes, I've never seen so many V-shapes in my life. Like, you know what I mean? There's these smaller ones through here, yes, but this move down here, there was no second effort to the lows here, and it just kept moving up. Bang, V-shape, bang, V-shape. It had a second effort here, but obviously at the bottom, once it started to recover up, it just went through there. So this is what I'm sort of feeling. I think eventually they're going to sort of catch a few people out, but you kind of need this one leg down up to the resistance and this leg down here. And I would sort of feel a bit more confident in this being going higher in Aussie if it did get that pullback. So if we got a pullback here and we saw that the buyers stepped up their bid from down here and then said, hey, you know what, let's make a new base just here. That would give me more confidence that we're going higher on Aussie. Like these V shapes, it's great and all, but with them, but as you can see, basically it just takes out the previous high and then fails down again and fails down again, which, it would line up with this sort of like top end of this kind of, sort of megaphone pattern. But the point I'm saying is that if this were to sort of be going back up over here, mid 66s, 67 or so, I'd probably want to see a little bit of a confirmation, and the confirmation would come from a little bit of an attempt down, and then we can actually see the buyers step from this move, step from this level down here up, and then confirm that, and then you start to have this move here tackling these highs, and that's where you get your higher high. And now you can see that there's complete shift of the or change of the trend, and now you're working with higher highs, higher lows, and that's how it would look. That would be a more sort of sustainable move and recovery in Aussie, opposed to, whoops, these things all over the place, opposed to just yet another complete straight V shape like this, because we've seen V shape, V shape, V shape, but as I keep saying, sort of goes up and then just gets smashed down, gets smashed down, gets smashed down. So we'll see how we go. But as I said, look, to be sort of more confident this thing's going to go up and stay up over these 66, 67 kind of levels, I'd want to see that pullback first, and then a sort of higher high moving through there, because I have a feeling this may sort of just run out a little bit of steam, and we will sort of come back down over here. And in saying that, I think that we'll probably actually come back and test the lows down here. I'm just saying if it were to go higher, a higher low would be a higher confirmation to be moving up. But I think once we break this little recovery channel here, I think the target that we should be really looking at, or that I will be looking at, will be back down here, at least at these 64.20s. And if we break that level down there, well, we've got a whole nother game to sort of play with there. But we'll get to that when we get to that. First things first, get out of this sort of like little recovery channel and through these swing points, and then we can start to sort of target back down towards 64.20s. All right, move along, and we've got silver quickly. Silver's obviously sort of popped up again, doing the same sort of thing, going up and stepping, going up, stepping. So it's just really just found itself another little consolidation box or breakout box through here, right on the 61%. It's been sold down, bought up, sold down, bought up. Like, it's just, you know what I mean? It's doing what it has done for a lot of the time here. I mean, we saw a lot of sideways actions through here before, obviously, that big breakout over there. The recovery, I have to admit, has actually been bigger than I thought it would be. I thought it may have sort of got capped around the sort of 37 level. But again, same sort of thing, that I think that if we see this, to me, it's just hard. Like, as you know, V-shaped recoveries aren't very common as a whole, but these things are really just, as you can see, just pushing straight back up over here as well. Yeah, so as I said, look, these V-shaped recoveries have been coming a lot more than I've pretty much ever sort of seen with it all. But again, look, you know, you're moving up, you got your recovery, this on the 4 hour, you're consolidating here. Look, this RSI is looking pretty sort of shocking, actually, to tell you the truth. You know, this is not a complete negative divergence because, okay, yeah, it hasn't put up this high, but certainly, as you can see at the moment, what we're going to sort of see is either one of two things happening through here. It's either sort of basically just consolidating, working off the overbought status and brings it back down. So then, yes, it can have another little launch and move up to the top side here. Or we're seeing this actually sort of like show that even though it's been bought up and bought up and bought up and bought up, the interest in, the strength of this is not really sort of showing the same with it there as well. So, you know, it'd be interesting to sort of see which way this one breaks. I want to keep sort of saying, hey, look, I think these things are going to fall over, but time and time again, look, I actually haven't personally traded silver for almost a couple of months now, pretty much after this big breakdown here. So where's this? This is going back to May. So I've found opportunities elsewhere with it all, and a long time through here, head and shoulders. I thought we'd break down, didn't happen. Broke up to the top side, didn't happen. Fake sort of false breakout back into this zone, didn't follow through. So, you know, I mean, I've been tooting this horn for a while, and I guess eventually maybe that old sort of like broken clock, is right twice a day kind of thing can work out. But for me, I've got better opportunities elsewhere. But I do think should you get back down underneath, say 37.40 and back under this zone over here, it's worth a shot down to this bottom side here. Yes, it's been grinding back up, but this RSI I think is a little bit of a concern for continued pushes up to the top side here for now. onto the one, and this has found itself a range inside a range. So, we've got this larger area, obviously danced underneath it a couple of times with it all. We saw the sellers come back in, and I sort of highlighted this the other day that obviously this is where the sellers have been previously. Let's put it back on that 4 hour, we can see it a bit better. Areas where we've seen the sellers have been previously, made an attempt to break through, second effort, higher high, got into this sort of big sort of weekly resistance zone, which was previously a support. Now it's played as far as a resistance, smack back down, and now we're just finding ourselves a little smaller range here. So I think again, look, you want to sort of feel that you probably get another push to the top side over here. If we do come down under here, I don't know if this is really going to be enough to hold at 717. I would say more likely you're going to get a move back down this side over here. But in saying that, I think you're probably almost seeing an equal move back up to the top side over here. And this will be the second effort into these sort of resistance levels. So obviously we got smacked back on, NFP that came at the same time. But as I was saying, it was looking a little bit more constructive, a little bit more positive. It was probably never going to go through the first time because it was 2 months between it had sort of come back and tested that sort of resistance level. But the smack back down has been very similar to these sort of things where it's going, slapped, slapped. So I think once you break through this level, through the 723, I think that could really open up some topside stuff. But as we can see, it's a very tough task for it to do at the moment. And I think more in the short term, you just want to see that the sellers are not sitting around the sort of 719 area so much. And finally, copper. Copper down the bottom here. So it was tightening up, looked like it was coming in. And I said, look, we're going to get a break. Again, I thought we were coming down down to the bottom side here, basically just with the continuation of the flow down over here. It has pushed up to the top. It is still inside. Technically, what we have is that breakout box. So I think, look, if it moves up here, you may see we can stand. Let me start that again. If it does break through this little box here, we can pretty much just whack a bit of a fib on it and try and sort of see how hungry are these people to sort of work this back up. I mean, look, it's still right down at the tail end of it all. And it's actually been consolidating for quite a while down the side over here. So that's why I'm sort of a little bit surprised that it's actually attempting to move up before moving down. But I'm still cautious of it. I'm still looking for lower levels. I wouldn't want to buy it quite yet. Though in saying that, if we do move up here, we could start to sort of look at where do some of these things line up into the sort of sense of like this move coming down here with the Fibonacci to sort of say, okay, where may it sort of sell back down to? And there's a couple of them lining up pretty well there. But if we see the sellers move in, before sort of breaking through the 38, then there's still the likelihood that you get the push back down to the bottom side over here. But for the time being, it looks like it may potentially have some sort of squeeze effort coming up, at least maybe up to the 23. And these previous lows that are just sort of chopped through here. It's a bit hard to use this in the sense of technicals because it's obviously such a big sort of data news headline driven event. It wasn't like, oh, here's the buyers, they're going to have another shot. Well, they got obliterated. Buyers here, they got obliterated. Buyers here, they got obliterated. So you probably will see some sort of pushback from these levels where we've seen the buyers attempt because there probably were buy orders sitting in these levels here. And if people get the chance to get out, I think they're going to jump out on that, which is going to make it a very difficult task for it to move back up to the top side there. Cool. All right. So, yeah, a little bit of a sort of flick through the last couple of charts there. CPI and RBA are the ones that I'm going to be sort of mainly sort of watching for the week. But I think really just pretty much the same as it's been the last couple of weeks. Got to be eyes glued to the DXY. If we see the market start to buy up and see it as a plausible option and actually hold it, it's going to need, in my opinion, a couple of back-to-back bits of decent economic data to give some sort of confidence to that US dollar is maybe something that's actually worthwhile, maybe a little bit oversold, maybe bashed a little bit harder than it should have been, and then we could see a little bit of a squeeze up with those sort of things there. But again, particularly at the moment, it's summertime, yada yada. But not only do we have a big sort of data week, we've got this Trump headlines and that sort of going on in the background there as well. So it's gonna be a bit of a wild week, but yeah, I mean that's what we sign up for. All right. Anyway, that's it from me.